Very good morning, all of you all. I'm here with yet another module of economics. The chapter is the role of state in economic development, and this is module 4. I hope you have gone through the first three modules for the better understanding. Now, let's have a quick recap on what we did in the last module. In the last module, I discussed the fiscal policy, its type, and its objectives. So, children, today we will learn about the tax, what kind of taxes are there, and what is basically taxes. What do we understand by tax? The very first question that comes to our mind, what is a tax? Tax is a compulsory contribution to state revenue levied by the government on the workers' income and business profits or added to the cost of some goods and services. That means tax is something that is a compulsory revenue that you have to pay. And it's also added to the goods and all. When you go and purchase something or you go and have food in the restaurant, you have to pay tax. Now, we have two kind of taxes. The first is direct taxes and the second is indirect taxes. Let's talk about them in detail. What is a direct tax? A direct tax is a tax imposed upon a person or a property. Means everybody is liable to pay the tax. For example, a direct tax to the government for different purposes is paid, which include property tax, which is a personal property tax, income tax, and taxes on assets. So anybody who is having a business or who is having a salary above a certain limit is liable to pay tax. Now, what is indirect tax? An indirect tax is a tax collected by an intermediary from the person who bears the ultimate economic burden of the tax. The intermediary later files a tax return and forwards the tax proceed to the government. For example, like excise tax, VAT, and service tax. So basically, indirect taxes is something which you don't have to pay directly. It's not on your income. It is an intermediary tax. Okay, I'll talk about this in detail. Now, let's see the type of taxes. These are already given in your book, but not that much focused. So I'll just tell you the names of the taxes. Like in direct taxes, it's included income tax, capital gain tax, security transaction tax, prerequisite tax, and corporate tax. And indirect taxes include sales tax, service tax, custom duty and octroi, that is on the goods that is transported, excise tax, and value added tax, that is commonly known as VAT, VAT. Now we need to understand the merits and demerits of taxation. Let's first take up the direct taxation. What is the advantage? The advantage is through increasing of various taxation rate, taxation can be used as the means of controlling inflation, especially the demand pull inflation. Means if the demand is a lot of demand is there, then the inflation has to be put to control the demand. The price has to be increased to control the demand. Since raising of taxation, if the taxes are raised, it results into a decrease in the purchasing power of an individual person, hence being a solution to the demand pull inflation. So it acts as an advantage over here. And the disadvantage is reduced purchasing power. Means obviously if the prices rise, then how do you expect to buy the things at the high price? That means the purchasing power is reduced. So definitely it's a disadvantage as well. If I read the exact thing, taxation, especially when the tax rate are high, has a tendency of reducing the disposable income. And what is the disposable income? The one which a man or an individual earns. That is the disposable income, which he is ready to dispose, which he is ready to spend. The next is indirect taxes, merits and demerits. If we talk about the merits, the poor can contribute. That means they are the only means of reaching the poor. It is a sound principle that every individual should pay something, however little, to the state. That means whoever earns have a responsibility towards the state. The poor are always exempted from paying direct taxes. They can be reached only through indirect taxes. They don't pay direct because they don't follow, or they don't fall under the category of that limit of the tax paying people. Their salary is less. So they pay the indirect taxes. Now, if you talk about the disadvantages, it's regressive. What is regressive? Indirect taxes are not equitable. For instance, salt tax in India fell more heavily on the poor than on the rich, as it has to be paid at the same rate by all. That means if a poor person goes and eat in a restaurant, he has to pay the same level of tax what a rich person goes and pay. So basically, whether a rich man buys a commodity or a poor man buy, the price in the market is same for all. The tax is actually wrapped in the price. It cannot be, parted from it. Hence, rich and the poor pay the same amount, which is obviously unfair because both of them is not having the same amount of salary and earnings. So this is called regressive. So one of the major disadvantage of indirect taxes. That's all in this video, people. I hope you have understood. If not, you are free to ask me questions. Please jot down your questions and keep it so that we can clear the doubts in the doubt clearing sessions that we'll be having. And please see the videos and also read the book parallelly for the better understanding. Rest, take care, have a good day.